everyone. Today we will be discussing how to trade market structure or how to understand market structure. Once you understand market structure and you can trade it, you are on your first steps into being a successful pro trader. So let's dig into it. We have the JPP JPY chart for hours time frame. What we will be looking for is the price to start forming higher highs and higher lows. For example, this is a picked example, so it is a successful one. We have a high, we have a low, then we had a higher high, a higher low. What we will do is we'll wait for a two highs, two lows, and the third is our confirmation. So what we're gonna do is we will enter once the latest high is broken, which is almost here. So this is our entry point, this is our stop loss, a few pips below the latest low, and the trade will start. Here is where you enter the trade, and you keep moving your stop loss with each and every a new higher low. When to exit the trade, when to leave the trade, or when to take your profits. That's what we're gonna talk about right now. So let's say you entered the trade at this point, moved your stop loss, and the price kept going up, forming a higher lows and a higher highs. Here's our latest high and our latest low, which was broken. So here is where we exit the trade. Why did we exit the trade? Because the price reversed and broke our latest low. The price broke our latest low with a profit 678 pips. That's when the price broke our latest low. And that's where you know that it's time to exit your trade. What makes these trades unique is they are really profitable with a really a near stop loss. Almost it's loss free because your stop loss is always moving, and even if it hits stop loss, it's gonna be with a really low loss. What it needs is a good risk management, a good money management, and a lot size management, because the trade might be opened for days, weeks, or even months, but the profit is really worth it. So you got 678 pips with a good lot size. That's a fortune. That's a really good number. It could be your monthly income. It could pay all of your bills. That comes back to your lot size. So let's see what happened next. The price continued going up. Again a drop, going up, and it's moving sideways. We do not recommend to enter trades when the market is consolidating. We had a very strong engulfing bullish candle, which could indicate an uptrend or a continuation to the uptrend where you could re-enter a trade. So we're forming, sorry for that, we're forming higher highs, higher lows. The second high was broken. Here is where you enter a trade and keep moving your stop loss, moving your stop loss, moving your stop loss, and your line was broken in here. So this is where you enter and this is where you exit. You exit with 251 pips, which is also a really good number. let's try it with a different pair, JPP USD, and let's look for a good entry. This is a consolidation period, which we do not recommend to trade using such a strategy. But for example, how to trade such movements, so the price is moving up and down inside this triangle, which is the consolidation period. What you wait for is a breakout or a breakdown out of the latest low and the latest high. What happened here is the price broke out the consolidation period, retested it, and went down. So you wait for the breakout, retest, then you enter the trade. A breakout, retest, let's just give you a better view. A breakout, a retest, you enter a trade. A breakout, retest, you enter a trade. And you enter the trade with the same technique or the same strategy. You keep moving your stop loss with the higher highs and the higher lows. For example, here we would have exited a trade and re-entered again to follow the trend. Hope you learned something new. If you have any questions, you can ask them in the comments and we will do our best to answer them on time. Have a good day.